Well, shares of Uber have been on the move today after the San Francisco-based company reported quarterly results that did not entirely align with analyst estimates, and revenue slowed. Though we're looking at the intraday here, I'm seeing a gain with Uber shares as we near the end of the trading day. And when you look at the year as a whole for Uber, the stock is up about 75% over the past year. Well, for more context on the company, let's bring in Brad Erickson, equity analyst in internet at RBC Capital Markets. Thanks so much for joining us this afternoon, Brad.
Thanks for having me. Good to be here.
So what do you make of the revenue growth slowing? This is the slowest revenue growth for Uber in the past 10 quarters, I believe. What should investors be expecting from the company from here, do you think?
Yeah, you're not going to like my answer necessarily, but it's largely around an accounting change, actually. So the way that investors most investors we speak with look at the growth and sort of evaluate that and assess it quarter in, quarter out is on the bookings line. So that's far more important, I would say. And that line actually accelerated, I think, by roughly 500 or 600 basis points. So we won't go into the details, but yeah, they had to reclassify some revenue. It's not representative of actual slowing. So I would encourage investors to kind of overlook that piece and look at the bookings acceleration instead. Okay, so looking at the bookings, what's your big takeaway for this quarter? Yeah, I mean, a few things, right? They obviously accelerated, but I think, most importantly on the mobility side is they're continuing to grow very, very fast, mid-teens, upwards of 20% plus, I think high teens on trips growth. And that's obviously, so that's the ride hailing business. And I think a lot of people still think that business probably could or may slow down over time. We don't think so, but that's a good proof point. And then on the delivery front, restaurant delivery, I think admittedly has started to slow down 3 years post-pandemic. But they have all of these new verticals, right? Grocery, convenience. They're starting to work with the government a little bit on different kinds of deliveries. That business is growing very, very fast. They hit a $9 billion bookings run rate on that in the quarter. And so, I think you put those two together, this company is showing that it can be, we think, about a mid-teens grower over the next 3, 4, 5 years. It definitely makes it attractive at current levels. It is interesting on the mobility side of things, on the ride-sharing service, because when you think about those prices that some people were facing not that long ago because of a shortage of drivers, it sounds like at Uber, people might have been turned off by that and the service, and yet seeing this growth and also seeing more drivers coming to the platform as well. Yeah, absolutely. I think, we talked to them about this morning, and I think a lot of people point to kind of the labor trends as being a potential indicator for driver supply. I think actually the inflationary pressures that are causing a lot of consumers, a lot of people to seek supplemental income, that's really, I think, been the bigger driver lately. Mm-hmm. And they spoke to driver incentives coming down. At mobility, driver incentives are at all-time lows. So, I think you can make the argument that there's a very, I hate to say attractive, but there's a counter-cyclical characteristic going on that investors will like. And then at the same time, the CEO said that we're well positioned for the journey ahead in good or bad macro environments. So, the macro matters to the person that's hailing the Uber as well, if their budgets are squeezed too. Yet he seems to think that, the environment, no matter what, is going to be good for Uber. Do you agree with that? Do you think we've seen enough of maybe the economic pressure at this point to really know if that's going to be the case? We don't entirely. I think if you look at it on an organic basis, meaning just as it stands today, certainly if we think that the macro is going to be pressured, that consumers are going to be more pressured in the next 12, 18, 24 months, sure, there's going to be an impact there. I think what Dara is referring to, though, is more that there's all of these new vectors of growth that they're pursuing where they're really just getting started, and that's going to provide outsized growth. And then the other thing I'd add is just on the organic side of the business, particularly the ride hailing side of it, I think there's a strong argument to be made that that tends to be a little bit more of a utility. And certainly when it's attached to things like travel that we know are kind of likely to remain very strong, even potentially somewhat in the face of a macro downturn, I think there is a lot of durability to the growth there. But no, I mean, he's referencing a lot of those other opportunities as offsets to likely pressure from the macro if there is some to come.
What do you make of the possibility that Uber could be included in the S&P 500 because it's met the eligibility criteria that would be required in order to do so? What sort of an impact do you think that would have if it were to be?
Yeah, I mean, it's certainly positive. To be clear, it's something that investors have been contemplating for some time, right? We can clearly see that net income was on GAAP net income, positive net income was on the way for some time. So it's not this huge surprise necessarily. Normally what happens, right, is stocks will get bid up into that event and then it's kind of a sell the news situation. We're actually more positive here beyond a potential S&P inclusion in that we think this stock has actually been quite overlooked or maybe not overlooked, but under-owned by the long-only investor community in particular. It wasn't profitable. The model was kind of messy when they came public. The valuation didn't necessarily look attractive. As this stock theoretically could get put into the index, we think a lot of investors are having to, build a model for the first time, look at it for the first time, and really in 2024, potentially making that decision of whether to own it or not to own it. And that could bring in a whole new tranche of incremental investors that could be impactful for the stock price.
Interesting.